Yes, yes, yes. It's your boy Seb,
It's Mickey.
It's BJ.
Andy Davison.
and you're locked in for another episode of Money Matrix. And today we are going to be discussing startup banking, the collapse of SVB, and Credit Suisse to Credit Sus. So, yeah, it's getting juicy. Yes, 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 yes. So, unless you've been living under a rock the last 2-3 weeks, you would have seen that the finance world has been absolutely going into meltdown. And in particular, the big story has been the collapse of Silicon Valley Bank. Now, this is a bank that has been such a friend to the ecosystem, a bank that we all know and love. They've been a key player. And I first wanted to start off with the question, why does Silicon Valley need a bank? So, anyone want to start with that? It's around startup financing, why startups need their own kind of bank. Who wants to take the question?
Sure.
We'll go with that, yeah.
You signed an ecosystem. Your name was on that.
Yeah.
That we support.
Damn, you saw that?
keeping this up.
Yeah.
Damn, you saw that?
My team was on there.
Yeah. So, why do we need a bank? The other banks, the traditional high street banks especially, aren't designed and don't understand our businesses, right? Especially when it comes to venture capital and growth startups and what that needs. So, yeah, a lot of small startups banked with SVB. But at the growth stage where you're growing really quickly and you're going from like whatever it is, 1,000 employees to 100,000 employees, 50 to 100,000 employees, and taking in millions and tens of millions of capital from like investors, you need a bank who can actually support that financially as well. So Silicon Valley Bank, where a lot of the money was around what we call venture debt, which almost acts like somewhat quote unquote a loan to those businesses, right? And when it comes to setting up a fund, if I go to any of the high street banks,
Barclays or something, what they?
you can name them if you want.
Yeah, okay.
And,
No names.
No, you can name them. I ain't got no ties. So you go to any of the high street banks and want to set up a bank account. They'll ask 10,000 questions. They probably won't do it because you're taking in money from like all these individuals, like some large institutions, some endowment funds, some wealthy people, other like group setups and structures, and it all has to go into just one place. And then we need three companies, and you need 2 or 3 accounts maybe for different things, tax and different things. And they're just like, nah, this is all complex and we don't understand it and all this stuff. So it's been a headache forever. And so Silicon Valley Bank just get it. This is their one focus, right? Primarily. Besides what they do with capital, as you could talk to the collapse and the details around it, what they do with capital, which kind of led to this collapse. But yeah, that's why Silicon Valley needs a bank and why startups have needed a bank.
Yeah, and I mean, I know you've done some stuff with. Am I right in saying that you've maybe partnered with Silicon Valley Bank and done some things with them? Like, before we get into the collapse, I just want to talk about like some of the key things that they've kind of done for the ecosystem and how much of a pillar they were, because they really were those kind of guys. So can you talk about like, on top of like the finance stuff, venture debt, like what other things that they were doing?
Sure. So when I was running a fund about 5 years ago, when it came to, hey, we need money to operate the fund as well, right? They were the first partner to step up quickly and just go, we're here. What do you need, right? If it's money, if it's operational help, if it's promotion or distribution or whatever it is, press, whatever, we've got you and we'll get it done. We're a diverse fund. We're like the first black people running the fund, right? And, first and second black people here running the fund. And they just stepped up and did that. And when it comes to the ecosystem more widely, when any funds or startups need a space for an event or need some sponsorship which helps them exist, get word out, and just actually like survive as a business and thrive, they've always been supporters. And the team there are just they're so helpful with investor introduction. So I've got always friends who worked at SVB and now at HSBC UK. The line they would use is when they'd meet you, they'd say, hey, do you bank with SVB? You say no, they go, who'd you bank with? And you say X. And they go, well, does your bank introduce you to VCs? And you'd go, what? And that's a real story. And that's something one of my friends did in a hotel lobby once. And the founders are like, what? Anyway, and then when he got home, he said that one of the founders DM'd him on LinkedIn and was like, hey, I'd love to chat. Because that's that additional value. They know the ecosystem so well. They've got all these connections and network that they can plug you in where your business needs plugging as well. So there's that all this additional value that they bring to the table. And they still do today, even though it's just under HSBC.
That's wicked. So, Mickey, the collapse of SVB, it was all a dream. I was on holiday when it was all happening. Partners at my fund were on a little skiing trip, and all of a sudden, looking at Bloomberg and talking about SVB is about to collapse. So break it down for us, bro. What was it like from your end? I know you're plugged in to the money matrix.
Yeah, it was intense watching it unfold, right? Because right now I'm obviously working on putting together like a really huge fintech conference, and a lot of the companies that sponsor our event, or a lot of the speakers that I book, a lot of the delegates that attend, they're all like literally all their money just evaporated overnight.
It's held in Silicon Valley
So it was
Bank.
insane. It was like, it was just purely like 48 hours of like, I remember being a kid and watching like Lehman Brothers collapsing.
Yeah.
And I was really young, you know, I don't know shit, but you could watch it and you're
So
like,
you were a kid?
Yeah.
no, fairly young.
We're
bro.
young,
I was-
Because I was doing my first day of my internship when they collapsed.
Yeah.
but I was
That's
still,
crazy. Wow.
I
How-
was-
how-
I was
how-
still-
We were like,
Yeah.
we were like, call it, yeah.
Versus now.
Oh yeah. So it made it. This made it way more realer. Yeah.
Yeah, no, but
I
like when
remember
you're,
more age-wise. I was like, damn.
when you're watching it at that time though, I didn't. Well, I mean, you said you were doing your own time. I wasn't working or in that kind of world then, you know. So it was. How do you kind of just understand the panic of fucking numbers on a screen beeping, right? And now like I'm watching it and I was like, oh my god! I was trying to explain it to Abby, my girl, and she's like not giving a fuck because obviously she's thinking what's going on. But the collapse was insane. It was a really spectacular thing that happened. I don't know if, you know, to break it down, essentially for a long time, Silicon Valley Bank, Andy, as you were saying, did a great job of providing a lot of support to startups. I think they supported something like 50% of all tech and VC-backed startups in the US, that's in the tens of thousands of startups. And essentially what happened to them was over time, their balance sheet, which is the amount of money that people who bank with them would deposit, whether it's from their funding or whether it's loans, whether it's revenues and whatever they make, that ballooned to like 180 billion by 2021. $180 billion, which is a huge amount of money. So banks, usually the way that they make money obviously is it's always a game of like arbitrage, right? It's like they get money from you, they lend it to someone else. There's a difference, or there's other types of products that they make money from. 2021, low interest rate. You basically, if you gave money to the bank, you were paying the bank to hold it, right?
Yeah, a lot of
When it comes
cases,
to
yeah.
inflation. So these guys, I don't know how this happened. This is the thing that's so insane about it. They put
We
about,
never know. We never know really how these things happen, but they do.
they put like 90 billion of that in what's like known as like long dated securities, right? So
And there's probably guys that were sat down on the board saying, you know what,
This is-
long dated.
yeah, it's like the most chill thing.
insane.
Yeah,
Was it like a
insane.
10-year,
So
10-year time
strange.
bond,
Like
10-year bond? Yeah.
Like, yeah, it could be 3 years, it could be 10 years. It's like different types of maturity, but that's so safe, right? Like basically nothing will ever happen to those bonds, but they pay you very little money, like 1.5, 1.6% on 90 billion. That's a lot of money, right? That's like over $1 billion they were making every year on the interest. But then the interest rates go up, right? Now the
of
Fed
recent,
rate, Bank of England rate, all of these central bank rates are 3, 4. They were going up,
Yeah.
and now they're close to 5% in the US, or at 5% in the UK, like 3%.
And a quick note, they're going up because they're trying to fight inflation, basically, right? Which is
Exactly,
just
yeah.
skyrocketing. So we talk about that in another episode of Money Matrix. But
Exactly, and but so that kind of then creates a really crazy, like, just insane kind of ton of events. So when the money is going, the interest rate is going up. On the one hand, you've got all the startups who had secured a lot of funding who are now struggling because the economy is a bit shit. So they're depositing less money into SVB or needing to use more of their money. And then on top of it, you've got a lot of banks which now start offering really good interest rates, right? Like initially 2021, you get 0.1% interest rate. Now you get 3% interest rate and if you've got $1 million, that's a huge amount of money you just get on interest.
facts.
So now your SVB and you're just screwed because you've got half of your money is locked away for 10 years.
Yeah.
But all of that money is not yours and your customers need that money right now. So what you have to do is you have to sell that at the current market price. Because the interest rates have gone up, they had to sell that at a loss. So they were looking at something like $20 billion losses on $90 billion worth of, or something around that figure of deposits. So it just
That's mad.
created a bank run. The US government had to step in. It was intense.
I think there's a key word there. bank run.
Bank sprint.
Bank run.
sprint.
Bank sprint. So
Thanks to guys like VCs, by the
yeah,
way.
maybe I know you can chat about this.
And
We were chatting in the WhatsApp group. We were like, listen, one of the main reasons why this sort of bank run happened is VCs are telling their startups there's some issues with SVB, Silicon Valley Bank.
Yeah.
If everyone kept their money in the bank and just operated as normal, SVB would have potentially been fine.
Yeah.
It would have been fine.
It would have been fine, yeah.
It would have been fine. But a lot of the VCs panicked and a lot of them were telling the founders, listen, take your money out of SVB now.
So for what it's worth, it would have been fine because they would have secured the investment that they would have needed because they were in an emergency anyway. They were in an emergency before any of the startups and VCs did anything, right? The Thursday night, whatever, like the Thursday afternoon, Thursday night, I think we just took a look at it and had a view that. So our view today is that money should be diversified across different accounts, right? I think that Thursday to Sunday night, we were. It was hard because I think for me it was more important that your money's locked up. What it really means is that you can't pay employees. Employees then can't pay bills, and it comes down to like real people at the end of the day, right? And I think did a lot of us call for our startups to move money? Yeah.
Mm-hmm.
Did that cause some mania? Yeah, admittedly. Was that the right decision? Unfortunately so, right? And yes, it all got secured anyway. In the end, HSBC secured it. And we're very fortunate and like we believe in the work they're going to do, whatever it is. But like ultimately, I think there's this like sentiment that if the VCs didn't cause this panic, but actually, the problem was, right? SVB, and I'll say it's on record as well. SVB just didn't communicate. So what we're waiting on, actually, some of us were in these WhatsApp groups, right? All these funds and like fund managers.
Yeah, and that's one thing that they were saying, isn't it? Because all of these VCs and founders, because of the way they connect and information, the tight knit circles, everyone, anything goes wrong, WhatsApps, quick.
People were rushing to me money. People were opening up random accounts. Some founders moved money, sent me to my personal account. Right, and there's a lot of money goes to my personal account. I was like, damn. And, they call me next day. Yo, it's for can you send the money back? I want money. And such a friend of me to sell in. It was a scary time, right? But I think unfortunately you have to make the best decision for. Even some investors were complaining like, oh hey, founders shouldn't be moving money to their personal accounts or other people's personal accounts, whatever. I was like, watch that. Founders should have let their business be at risk of losing all their capital and dying. I was like, that doesn't make any sense. So it was definitely a survival mindset. And
but I wondered like the issue is, but isn't that exactly the issue then, right? With a bank run, because essentially you end up pitting your founders against other founders, right? Because that is the issue with a bank run. It's like whoever gets to the money, then you're good, and whoever doesn't,
Whoever's too slow.
There's also like, and part of the issue with that though, right, is especially when we think about founders from diverse background, there's information asymmetry.
Yep.
Right, so your fund, for example, competes with a Sequoia.
Yep.
Not like but you get what I mean. You're operating in that same space, right? So imagine how hard it is, for example, for you to close a deal compared to Sequoia, right? They could blow you out of the water. Like in terms of financially whatnot, right?
Yeah.
Like you've got obviously your own.
Sure. So we're up at different stages, right? But like, and founders weren't necessarily. It wasn't like arbitrarily speaking. It wasn't like here's $1 million. Who can rush to get the $1 million first? It was here's the money in your account, right? And are you going to get the money out? Yes or no? Otherwise, so on Friday afternoon we got pinged at whatever time it was. We got pinged at 5:02 or something, 5:03, and it was like, the CEO of Silicon Valley Bank UK is going to speak to us all at 5:10 privately, whatever. Before this, I know her, right? But I was just like, came on a call and
it was held like on a Zoom.
Yeah.
On a Friday, 5, you know that's serious. 5 o'clock.
5:10, right? And we got pinged at 5:03, and we were trying to get the call sorted all day. My investors are trying to get the call sorted all day. She said, and she came on and she said, nothing's wrong here. She said, I can't talk to you. She said, I can't talk to you. Yes,
it's like
but nothing's wrong here, right? And we've got our own balance sheet. And we're all fine. And by the way, all that stuff was so true. And I said after the call, I said, either she doesn't know, or they've been told they can't say anything from the US. Right? Part of the problem is, then then US goes into administration, quote unquote, and then UK entity can't exist. And then we end up with this, like, somewhat along the lines, we end up with this issue we have around 11 p.m. here on a Friday. And so unfortunately, it was the right call for everyone to make. And I'll tell you about it for what's worth. I meet it on Thursday afternoon. I looked at the insurance level and I was like, oh, it's insured to £85,000. So I said to my founders, I was like, leave £85,000 in. I was like, matter of fact, just leave that money in. I was like,
Yeah,
if I said, I'm confident this will get sorted over the weekend anyway, but in a worst case scenario, you've lost 85k that gets insured, you get it back in 2 weeks, right? You don't just take the rest of the money out. As long as you're not, all you haven't got in there is 85k, then you're going to lose all your money. But I was very much like, take half out, leave half in just in case, right? It's not about taking all the money out. And if you haven't got tens of millions or 100 million in, some funds had hundreds of millions in and they had it stuck. They didn't move early enough. But I'm very fortunate. We just on the Wednesday afternoon, I read one of their banks, their statements. Just like I sent it to someone there, and I was like, "Oh, hey, is this an issue?" And they were like, "No." And I was like, "Okay." The Thursday morning, I just saw something else, and this is before the mania. I just saw something that they were looking to get an investment in to cover losses, and I was like, "But your only money is from us, the startups." And I was like, "We're so illiquid. We're startups. No one's even invested. A lot of people aren't investing in startups right now, and funds aren't moving money. So if we're your customers and we're not really liquid, and you need money, you're going to get an investment. Sorry, there's a gap somewhere.
Something ain't adding up.
So
Something ain't
I was
adding
talking to
up.
a few people. I was like, what's everyone's thoughts on this? And at that time, no sentiment had set in yet, mass sentiment around this stuff, right? So everyone was just like, don't know. And I was like, so I called through my phone. I was like, I think you should just like have an eye and move some money probably.
I think it's like, it makes sense, but I think that's like the issue is it's just like the nature of the dilemma though.
Yep.
Right? Because if you look at like what we were saying right at the top, right? Why SVB exists. I think they came into the UK like 2013, something like that.
Sure, yeah.
Right, like fairly
Sure,
recently. And they managed to get a lot of market share in that startup space. So obviously the only conclusion can be that obviously that there was a market that wasn't being catered to.
Yep.
And now that goes to HSBC, so it gets swallowed up by another same old
giant bank.
incumbent,
Yep.
slow mover. And like I think, what one of the reasons why SVB was able to get those banks, it's like it's culture too, right?
Yep.
It's like there's a cultural fit when you're trying to bank with a startup is different to if you're a HSBC or a big stuffy bank, right? Like, yeah, you need the paperwork, you need all of the old school kind of way of thinking and the very like rigid systems, right? Whereas now, like, if you're SVB, you're kind of dynamic in your thinking and dynamic in your approach to risk. But the issue is now, essentially, that player has gone out of the market. And the reason it's gone out is because a lot of startups were trying to protect the short term. That caused that company to go out in the short term, but in the long term too, that like my big fear anyway is like it kicks away the ladder, right? Of like, actually now, what's going to happen to all the millions of, or thousands at least, of founders, right, who don't have a company to back their dreams or give them an account when they need or introduce them to investors, right? Because HSBC is going to probably go back to what it's always been, right? Like an...
we hope not, right? And there is that fear, admittedly, there's that fear, because people hit me up every 2 days now. They're like, fund managers, they're like, who you bank your fund with? Where should we put our fund? So where should we keep our money? I think there's no great answer, right? Like, it's... One is HSBC, Silicon Valley Bank. The whole team's still there. The whole operation's still there. The CEO of HSBC has said, we're all in the room and just said, hey, we're going to leave them to operate. Yeah. We're going to capitalize it and we're going to have an eye on it, right? And make sure that it's financially stable. But they've done good work. There was a few financial mistakes. We will make sure those don't happen again. And HSBC will probably most likely won't let that happen again. But you're right, culture is culture. And sometimes there is an inevitability to culture. But I do think that hopefully some good work can continue. And or opportunity. This is startup land. Someone else will come
innovation.
up.
People are saying
innovation.
This
is it. Maybe we just keep our money.
Businesses coming.
Yeah. So like all these things, right? Like maybe we just go and do that, right? Like TransferWise was a big solution that over that weekend, and so I think where any disaster lies, startups are born to solve these problems as well. So yeah, problems equal opportunity.
Wicked, and we'll wrap it up. We'll wrap it up there, man. Beautiful way to end it. Been your boy Seb,
Mickey,
DJ,
Andy Davis,
and this is another episode of Money Matrix.